Library Foundation. I also am the program coordinator for this class, so if you have any questions, let me know. Anyway, the volunteer group that's putting on these classes, the Redwood City Youth Literacy Council, and Ryan is president of that council. He's going to be teaching part of this class today, and we are sponsored by the Redwood City Library Foundation. This class is the sixth in the series of 9 classes with the theme changing each month. This month is all about building good credit. This topic is so important for your future that we will also be discussing more about this topic next month. Next month we will be going over what good credit is and how, or this month we'll be going over what good credit is and how to get it. And next month we will be going over the types of credit with a more in-depth look at credit cards, since that'll probably be one of the first types of credit that you get at your age. Make sure if you haven't signed in to do that at the front desk, because that's how we're keeping track of the number of people, and also if you're trying to go to 6 of the 9 classes for the gift card, then we have to make sure that you're registered. There, you'll see that there's handouts on your seats. So there's a pre-test. Yeah.
Is it 6 or 7?
7 of 9, you're right. Sorry. 7 of 9. And so there's some things we're going to be going over today, some activities, and also a sample of a credit report that you can look at more in-depth detail, because it doesn't show that much detail on the screen. But I want you to be familiar with how a credit report looks. And then also we're going to do some activities, so some of those sheets are related to that. So now I'd like you to make sure you do your pre-assessment. Again, you know, you're not going to get these scores back. I know we have some new people in the class today. These are only done so that we can determine if you're learning anything from the class today. So we look at your starting scores and your ending scores to make sure you learned something. And so if you want to do your pre-tests and hand them to the center aisle, I'll pick them up. I'll give you just a couple minutes for that, and then I'll hand it over to Ryan to start the class.
Hi everybody. Today we're going to be talking about credit. So credit's super important for the rest of your life. It's now it's a pretty huge part of life now, with all the credit cards and things like that that you need. But basically, now it's just become a necessity that you have this credit where you buy something using credit and then you end up paying it back later. So that's why it's so important in today's life, because most people end up borrowing money for things like houses and cars and just regular everyday items as well. So first we're going to start by covering what is credit, good credit versus bad credit, ways to build good credit, factors lenders use to determine whether they'll lend you money, and credit history and credit scores. So, first, what is credit? Credit is borrowing money to spend now that you will pay back in the future. So think credit cards and loans. Those are 2 different types of credit. They're very different, but they're a similar concept. It's a binding contract, which gives you flexibility in using funds. It allows you to have emergency funds whenever you need them, immediate use of items that are purchased with credit. Also, you're able to get bargains sometimes. It provides a spending record and can also consolidate bills. So several bills a month can be merged with minimum monthly payments into one payment instead of several. So.
Okay. One question here. A binding contract doesn't necessarily mean you have signed for something, right? A binding contract can be a verbal agreement. So if you borrow from somebody else and you agree on terms like I'll return it back in 2 days, and in exchange I'll give you a drink at lunch or something like that, that's still a binding contract. That's an agreement that both of you have negotiated and agreed upon. Okay?
Yes?
I was wondering if like banks can see what you buy on credit, and if they like judge you whether or not they like lend you money. Why?
banks can see what you buy, and the only thing they use that for is for fraud detection. So I'll give you an example. It's kind of a funny story. My husband and I, we do a lot of different things. We travel, etc. But one time we went and we got Ryan some sports equipment at Big Five. And so we've got shoes and t-shirts and everything. But, so they looked at that and they said, sporting goods store, that family never buys sporting goods equipment. So they did call us and say, is this your charge? Because, you know, there's some sort of athletic activity on here, and that doesn't fit within what you normally buy. But they won't look and see, oh, you spent a lot of money downloading iTunes or whatever, and judge you based upon that. The only thing that they'll look at is to see if you're paying on time, okay? Or if you're getting close to your spending limit, which we'll discuss more about in a minute.
Yeah. Okay, so good credit can get you a lot of things. It can get you better interest rates and less fees. It'll get you higher amounts that you can borrow over large periods. Choices of lenders, and also coming with the choices of lenders, it gives you also different interest rates that you can choose from. Also, you have the flexibility to borrow money when you need it for various life changes, such as college, to a new job, family changes or emergencies, or if you need it in time for some sort of bargain. That's very important because that way, all these different things, like if you don't have a choice of lenders, that's very important, because if you don't have a good credit score and no lender is going to lend to you, then you're going to have to end up going to like the worst lenders around. You're going to have to end up just barely scraping by paying exorbitant interest rates to them.
So let me ask you a question. What are some lenders that you guys know about? Can you throw out some ideas?
Bank of America.
Yeah, banks, credit cards. So for instance, MasterCard and Visa and Discover, those are different companies than banks. Now you'll see like Bank of America, Visa or whatever, but it's not Bank of America lending you the money, it's Visa. And Bank of America is just processing the payments for that. So what is another type of lender? Yeah.
Like close friends.
Yeah. So a close friend or family member might actually give you a lower interest rate than a bank would, right? Because they know you, and if they think you're a good credit risk, then they'll lend to you. What are some high-risk lenders that you may not think of as lenders that are out there on the street that you see just driving on? Yeah. Yeah.
Loan sharks.
Loan sharks, yeah. But you don't usually see them have a shingle out, right? That says loan shark. What are they typically called? Does anyone know what that sort of a lender is called? Pawn shops, right? So pawn shops, if you want to borrow from a pawn shop, what do you have to do? Does anyone know? Yeah.
You give them an item, and in return they give you money, and when you pay them back, they give you their item back.
Exactly. So that is called collateral, which Ryan will get into in a minute. But they, in order to offset the risk, they take something of value from you that if you don't pay them, they can sell. But typically the pawn shops, unless you have something pretty valuable to offset that, the interest rates will be higher than a bank. But it might be lower than a credit card company, because credit cards are pretty high, they're like 18%. So another thing that you might want not think of as a lender, but is a lender, is the check cashing companies. So what they're doing is, some people don't have banks. Maybe they immigrated from another country and they haven't established anything here. They don't have any legal documents or something, and yet they're getting paid by check. And they don't have any proper identification and things like that. So the check lenders will essentially pay you for your check and take a portion off the top as a fee. And in a way, that's a sort of lending, right? Because you're going to have to prove to them why they should give you the money for that.
All right, so next, bad credit is going to get you higher financing costs, limited or no choices for financing, lower credit limits, and a chance of job denial. Because your employers, they see your bad credit score, they're not gonna wanna hire you because your credit score says something about you. It says that you're responsible or that you're irresponsible, depending on whether your credit score is high or low.
How many people knew that when you apply for a job, they typically run a credit report? Yeah, that's pretty new. That's like in the last 20 years that started happening, which of course is before you guys were born. But it used to not be that way. They used to not have that merged credit reporting system. But now it's very, very common that they will run a credit report on you before they offer you the job. Now, why would that be? Does anyone have an idea why they would want to do that? Yeah. Exactly. He said, because some of you in the back might not have heard him, it shows that you might be irresponsible if you're not paying your debts back on time, and then it reflects on your character, right? Which is going to be the one of the things that Ryan's going to talk about in a minute. And so if your character is bad with your debts, it may reflect whether you're going to come into work on time, whether you're going to steal from the company. So it's very important right from the get-go at your ages to start this, okay? Because when you apply for jobs, they will run a credit report. Okay.
Okay, so here's some ways to build good credit. So first, you can start now by opening bank accounts in your name. And then you can manage them wisely. Because even if you don't manage your account wisely and you open it, that's going to say something about you too, and your bank's going to see that and they're not going to like it. So especially your checking accounts, you also need to take care of those too. Because if you let those get out of hand, then that's going to be bad for you.
Now, does anyone remember what, if you spend more than is in your bank account, what is that called?
Overdraft.
Right. It's also, sometimes they give the initials NSF, which means non-sufficient funds. So
yeah.
that also shows up on your credit report, and it shows as a negative if you ever withdraw your checking account. Yeah.
Why do they use the person who received the check pay the money to the check on?
Well, that's a good question. You want to handle that, James?
One of the main reasons is because paperwork has to be processed, so it takes someone to do it. The other thing too that's downer about overdrafts is that it costs an extra $35. So then, if you write a check for $100 and you have 50 in there, you're going to open the check that bounced plus, like you said, the service fee, process that overdraft, and then $35 fee as well. So it'd be kind of expensive. The best thing to do is try and keep track of everything with a nice check ledger. Keep track of everything.
And
Because sometimes you might write a check and it might take a few days for that person who wrote it to actually put it into the bank. So you go out and, you buy maybe tickets to the new Avengers movie or something like that, You expect to have that money in there, but, oh, wait a second, that check hasn't gone through yet, and then it just costs extra money.
And they'll charge the company, which was your question, right? Sometimes they'll charge the company like Old Navy if you shop there or something. The reason why they do that is because they want to encourage the companies that are accepting checks to get proper ID. Because who ends up paying if there's a bunch of credit losses? You guys do, right? In higher prices? Because those companies are going to have to put it through. So they want to discourage companies just taking checks without considering whether it's going to be good or not. The other reason why they charge people for accepting bad checks is because people do it sometimes to float, what they call float. So they'll pad their account, assuming someone's not going to cash that check for a couple days. And so they want to discourage that sort of activity.
Okay, yeah. So another thing is you can get a gas or store credit card, and make sure you always pay that on time as usual, because it's very important that you learn to pay it on time. If you get a gas or store credit card, that helps show credit card companies that you're responsible and that you know how to handle credit account.
And they're easier to get.
Yeah. There's a lot, it's a lot less strenuous of a process than a regular credit card with a bank.
And why would a gas or store credit card be easier to get than, say, a Visa card? Does anyone have any ideas? Yeah.
Because you want someone to do that with the answer or.
Well, that's part of the reason. He said because you can only get so much at a gas store. But the main reason why they're easier to get is they want you to buy their stuff, right? So that's why they want you to be encouraged to buy their stuff. So they give you a credit card, say to Nordstrom's or Macy's, or Chevron will very easily give you a gas card. So when you're starting out, those are the two things that you should look at first. And then you'll be more qualified to get like a Visa, or plain Visa or MasterCard.
Yeah. So also, you should get a secure credit card and link it to your savings account because with this type of account, you don't have to pay your, if you don't pay your loan, the bank can take the money from your savings account and that saves you because that way, if you forget to pay your bill on time or something, the bank will just take it from the account and it won't hit your credit score, which is very useful. You should always pay at least your monthly payment each month. That's really important because if you don't pay your minimum monthly payment, then that subtracts from your credit score. Always stay within your credit limit. And actually, you want to stay a bit away from your credit limit because your credit card company will get nervous if you start going too close to the limit, and then they won't want to lend to you in the future. So yeah, always pay on time and never miss a payment. I can't stress that enough. It's really important that you pay your bills on time because otherwise you end up paying more money in the end, and also it just subtracts from your credit score and you won't be able to get more money in the future. Also, if you can start now by taking out a small loan and then repaying it monthly on time. This is really easy thing to do, and if you can do it, then it's a good way to build a good credit. So here's some ways to get bad credit. One good way is to make payments late or to miss them, because this causes, in addition to hurting your credit score, this causes late fees, and it also even raises your interest rates, which is very problematic. Paying too little on your credit card bill. Your minimum monthly payment required is already stated on your monthly statement. But if you don't make the minimum, then you're considered late, and that deducts from your credit score. If you go over credit limit, obvious. If you go over it, then that's just bad. It's bad for you. And there's a whole bunch of other fees, and your interest rates will go up and all that. Also, if you have too much debt out at one time, that's bad because if you have too much money out in the open, your bank and your credit card company and all those other people that are lending you money are going to see that because they can see that, and then they're going to get nervous and they're going to be afraid that you're just going to default on all your loans. Also, applying for too many loans at once makes you look bad because it makes you seem desperate. Like if you go down to, were you going to say that, James? No, go ahead. No, go ahead.
You hit the nail right on
You
the
said it
head.
better. You said it better.
Well, one of the biggest things I want to stress is that I know this stuff's a little bit overwhelming at first. By the way, let me introduce myself because I see some new faces here. My name is James Rogers. I work at Wells Fargo. I'm a personal banker, so I do solutions like this for people every day, whether it's buying a car or credit card, stuff like that, okay? Has anyone ever tried to borrow, and I'll just say, any volunteer, borrow $5 from their buddy? Ever? Anyone? Okay. You over in the yellow shirt. What's your name again, partner? I've seen you before. Carson, okay. Now, this $5 you borrowed from your friend, did you pay it back? And again, don't be embarrassed. It's just $5. We're just talking about it.
Not yet.
Okay. How long ago did you borrow the $5?
November.
Okay, November. So that's a few months ago. It's almost 6 months ago, huh? Okay. So now to your friend, what has been altered? It's a word called reputation. So now this friend, they may still be friends. $5. You're not going to break up your friendship over $5, hopefully. I don't know. But my point is that this is what we're talking about when you become adults. This is the way you're going to build that reputation on a more adult, more professional level, okay? So all of these factors that we're going to discuss today, it's all going to be about how to build a good, solid reputation. So that way one day you can get what? A loan for what? What's a big thing you want to purchase one day? Don't say it Bentley. What's up? Well, there you go. That's probably going to cost some money, right? I was thinking more realistic goal, like a house or something, right? Braces for your kid, whatever it may be. But one day you're going to need a little bit of money, right? And the only way that someone's going to lend you money with a nice low interest rate and they're going to be favorable with you is if you build a positive reputation. And again, I wasn't picking on your partner. I was just trying to say that even in this realm, at this age, you still have an idea of what credit is, of what reputation is. Because you're defaulting on that $5 loan that your partner lent to you. What if you went to that same guy again and like, dude, starving today, man. They got a special on these cheeseburgers over at McDonald's, 2 for $5. Can I borrow $5? Wait a second. My records show you never paid me back that $5 from November, right? So anyways, and I know that sounds silly, but I'm just trying to make it relatable so you can understand the reality of it. Because it's going to be a lot harder for someone to give you 10 grand versus $5, right? Okay. Carry on.
Yeah.
So we have a couple videos. Now, in one of these videos, there is a strong accent. So one of the comments we got last week is it was a little difficult to understand. So just bear with us. It is Hispanic, so I know a lot of us are used to listening to that. So.
But does that make sense to everyone? Does everyone understand that? I mean, right? Relatable. Is that a thumbs up?
Yeah.
Wow. Thank you. Thank you.
Every once in a while, friends and I like to hop in the car and go on a short road trip.
Sometimes we have a destination. Other times we just get in the car and drive.
When it comes to taking the road to good credit, it helps to have a clear idea of how to reach your destination.
Yeah, otherwise, you might not like where you end up.
Credit is more than just using credit cards.
You need credit for getting an apartment or house, buying furniture and major appliances, getting phone service, and reserving a hotel room or renting a car.
I bought my car with credit. I didn't have enough money to buy it with cash, so I'm paying for it all the time.
Credit is borrowing money to buy something now and promising to pay it back later.
Credit is an important part of modern life. It's a lot like a driver's license. It's hard to get around without it. Whenever we plan a road trip, we like to take a map so we know the route.
Then, we pack whatever gear we need for the trip.
And I check out my car to make sure it's ready to go. I even check spare to see if it has air. Before taking the road to good credit, it's a good idea to talk with your parents about your plan. There are plenty of easy ways to get started. Go to the bank and open a checking and savings account to show that you can handle money responsibly. Then apply for a credit card with your bank. Buy something on time from a major store.
You can go online, or call a few credit card companies and ask for an application. Apply for a gasoline credit card. These are just a few ideas. Be creative. You can probably come up with many more.
Don't get discouraged when first attempts don't work. It took me a few times to establish credit myself, but I finally did.
Maybe you'll need someone, like your parents, to co-sign for you. Whatever. It may take a little time. Your patience will pay off. It won't be long before you're getting down the road to good credit. pay your bills on time. Don't. You may be unable to get credit the next time, but for your creditor may increase the interest rate you must pay. You could say it's one way to live stranded alongside the road to good credit. Whenever I take a road trip, I practice good common sense. I'll watch the gas gauge to make sure I have enough fuel to reach the next stop.
And we never go further than our money will take us. It's always fun to get away, but it's not so fun when you can't get back.
Common sense is important as you travel down the road to your credit. Don't get in over your head and charge you more than you can pay off.
Try to pay off your balances the full each month. Remember, the interest on your credit card costs you a lot, particularly when you carry balance and pay only the minimum each month.
Keep your receipts and compare them to your statements. Contact your credit card company immediately if there are any errors. Keep your account number and contact information in a safe place so you can report it to your credit card company in case your card is lost or stolen. Don't go over your credit limit. That can get expensive. Close inactive accounts. Protect your credit cards as if they were cash. Read the fine print in your credit agreement.
And destroy any credit offers you receive in the mail. Sign your new cards immediately and cut up your old cards.
Practice good habits, and you won't get stranded without a credit.
Just like driving, having credit is a privilege. Use it wisely and enjoy driving down the road to good credit.
This one's really short.
Step 1, open an account at a financial institution. It can be a bank, a credit union, a brokerage house. Take your pick.
Just make a deposit, say $100 or $200.
And coming in a close second, pay your bills on time.
This is one of the biggest steps in establishing good credit. If you're responsible with your own money in the institutions you choose, you can prove to lenders that you can be responsible with their money too.
Step 3, get a prepaid credit card. You can get them at the bank.
That becomes your spending limit.
And finally, never max out. Let's do that again. Never max out.
That shows that you only use credit for things that you need, and it will save you from drowning in debt.
And that's how you do the Biz Kid Good Credit Shuffle.
Okay, so now we're going to do an activity. You see that you've got a little sheet of paper. Does everyone have one? Okay. We want you to experience what it's like to be a lender and a borrower. And some of you have probably borrowed things from other people before. This is very similar, but I want you to look at it differently. I want you to look at what it would be like if you had to go and actually apply to get whatever you want on that sheet of paper. So mingle with some people around you and pair up with somebody and try to negotiate or get them to lend you whatever is on your sheet of paper. And then afterwards, we'll talk about what that was like and the types of things you discussed if you were the borrower versus the lender. Okay? So I'll give you like 2 to 3 minutes for you to do that right now. All righty, let's...
So how did that work out for everyone? Did anybody get to agree upon the terms, or did everyone kind of get stonewalled, or what happened? What was your experience?
It was very easy.
It was very easy? Why? Because she's your friend?
Yes.
How long have you two known each other?
Oh, since first grade.
So it's been a while, right? So see, there's a direct example of reputation. Now, we all have different relationships with everyone in our life, whether it's the guy down at McDonald's that knows your meal that you like all the time, whether it's your parents or your friends or your teachers. They're all relationships on some level, okay? So focus on, exploiting is not the right adjective, but focus on taking advantage of these relationships in life and build those networks. Makes sense, right? Yeah?
Jeffrey wouldn't give me his $30.
Why wouldn't Jeffrey give you the $30?
I don't know.
Maybe you didn't plead your case well enough.
Oh, I did. I did one scenario.
What was the incentive for you to borrow the money from Jeffrey? What incentive did you provide? Did you say something like, hey, I'm going to borrow $30 today, and in 2 days I'm going to pay you 40?
Oh no, I said I think you need a sweatshirt, so you should give me $30.
How much is 10 bucks of 30? It's a third, right? So 33%. So you would have agreed upon a 33% interest rate loan. His return is guaranteed. And then furthermore, you can add another stipulation to that deal that says if you don't pay me in 2 days, the agreed upon 33% interest rate in full, you owe me an additional 15% or whatever. You know, these are all.
And it's actually more than 33%.
See? Physical
Does
threatening,
anyone
stuff
know
like
why?
this. That's why you borrow from a bank, because we're not allowed to beat you up.
So he was saying if you borrowed 30 and you paid him 40 in 2 days, it would be 33% interest rate. It's actually more than that. Does anyone know why? Because you're only borrowing for 2 days, right? And interest rates are based upon an annual yield.
Yes, they are.
So it's really an exorbitant amount. Now, who else was successful in doing their cards? Okay. Would someone like to share how they went about negotiating the terms? Yeah. Okay, how about you?
Well, he would give me his shoes because I needed them
Come on, guys.
for class, and I would give him the $5 for lunch.
Great. So bartering between people is a way to lend, right? So you figure out what the other person needs, and then you can more easily negotiate your deal. So if you were a lender, though, you wouldn't need anything, right? So did anyone do it without bartering for whatever the other person needed? Yeah.
I just asked him if I could borrow his phone.
Now, did he know you?
No.
So you just said, whatever, I want her as my friend, sort of thing, right?
Not like a 3-day borrowing. I think it's just for a call or something, so I can get my.
Now, what would be one of the stipulations that you would add in your contract if you were a lender? If you wanted to lend somebody your phone, what would be something you could add into that contract? Yeah, you could offer something as collateral, like, give me your purse and I'll hold on to it until you give me your phone back, right? Anything else? Would you ask them anything about themselves? What school do you go to? Do you have a job? Yeah. Right, if you don't know someone at all, you're going to ask them some basics like, where do you live? How do I find you if you don't pay me back? Things like that, right? Have anything to add? Yeah. Yeah. Threat sometimes, consequences is what he's saying. He said it was a joke, but he told his friend that if he doesn't pay him back his watch, he would break his arm. But another way to do it is, if you don't pay me back, then I'll charge you an additional fee, right? Or I'll repossess your car or whatever collateral that you have offered for that home. So we wanted you to get a little feel of what it would be like to be a lender and a borrower. And now we're going to move the next step and talk about, if you were a lender, what do they look at? So as you're going out starting these things, you know where to begin. Okay? You want to take this, John?
Yeah, sure, why not? So the factors that banks use to determine whether to lend you money: 5 C's, character, capacity, capital. Hold, please. Collateral and conditions. So let's go over each one of these definitions, okay? Character. What's another word for character, Carson? Reputation, right? We went over that a few moments ago, okay? So time on the job. How long have you been there? If you've been in a place for 20 years, you're pretty accountable, right? If You've had 20 jobs in the last 20 years, you switch every year, a little bit less dependable, okay? All about reputation, guys. Time where you've lived, so if you've lived in 30 different addresses in the last 5 years. Again, there's situations that happen, maybe you travel a lot for work, whatever, maybe your dad's in the army, who knows. But again, these are all kind of standard issue things, the 5 C's, okay? Next is going to be capacity. Capacity is going to look at how much you owe versus how much you earn. So if you owe someone $10,000 at a bank and you only make $20,000 a year, it's not going to look that good, okay? Again, yeah.
You have to tell the bank how much you make a year.
Absolutely. Because what that's going to do for you is it's going to increase your reputation. So if you make $20,000 a month for 12 months, what's that, about 240K, right?
Yeah.
240 grand? You'd rather tell them that than tell them nothing. So then you can repay the loan that you're asking to borrow from them. It's just another level of disclosure. I mean, you're going to give us your social security number, your income. You're going to tell us how long you've been at your permanent address, stuff like that. Next is capital. So how much you own minus how much you owe. So, quote unquote, your net worth. Do you have value saved assets to cover your loan? I don't know, a bunch of money in a trust account somewhere, or a couple of houses over in other states, whatever it may be. The next factor is collateral. Any assist that the lender has the right to take to see, repay, whatever, it doesn't matter. Okay, if you're going to buy a car, come on guys, we only got like 30 minutes left, seriously. You're getting paid to do this, you get free pizza, come on, focus. Okay, now, there's a point to this, guys. We got grants and stuff. People are paying for this. So for 20 minutes, let's just focus on this and then we'll get you some pizza, okay? Now, if you're going to go buy a car, the bank's going to own that car until you pay off the loan, okay? So you have a guy that comes in today, he wants a Dodge Ram pickup truck, it costs 60 grand. So I'm going to give him $60,000, but he doesn't own that car. He can drive it around, he can use it, but I own the car until he pays me back all the money, okay? That's called collateral. What's up, Arthur? Then we repossess it. If you miss your payments for a few months, we're not going to break your knees. We're going to come in the middle of the night, we're going to take the car off the driveway on a tow truck, and you're not going to see it again. And you want to know what the problem is? You still owe me money. So, well, now that's totally different. Now you're talking about one-offs, okay? So if you don't like the car after a few months, maybe you can go back to the dealership and negotiate another deal for another vehicle. Everything's workable. But we're talking about being responsible. We're talking about building a positive reputation by paying on time. Cool? Rock and roll.
Yeah.
So what happens if you, like, if they miss the payment, but you already owe more than the bank does the car? Is it still the bank's car, or is it still the...
Start getting into trouble. So what you'll do is that you'll never have to pay for anything that you don't agree upon. So I'm regulated by the federal government to disclose every aspect of the contract that you're negotiating with me, okay? So I'm going to tell you what the interest rate's going to be, how long you have to pay it for, and how much the payment's going to be every month, and then we negotiate from there.
Now,
So-
sometimes that does happen. Like, say you went and you got a car loan, and so they took the paper for the car as collateral. So if you default, they can take the car back. But in the meantime, you have an accident, which you don't get repaired. So the value of that car drops dramatically, right? Because it's now damaged. But you're not going to say, I'm not going to pay my loan because now my car is worth less than what my loan amount is. And why wouldn't you just do that and say, here, you can take my car? Exactly. It'll affect you for a long, long time if you do that. And you all know, right, that almost everyone in this room, probably everyone, your parents don't actually own your house, right? The banks have a lien on that house, so if they don't make their mortgage payments or whatever, then the bank can come in and take the house. Now, the way California real estate goes up and down, a lot of times the house is worth less than when you started. But if you don't want to affect your credit history for the rest of your life, then you should turn that asset back into the bank. Yeah.
So we rent where we live. If our landlord were to, let's say he hadn't paid off the mortgage yet, if he were to lose the house and we still be able to live there, would we pay the bank, or would we have to pay because the bank got repossessed?
If the bank repossesses, they have the choice at that time to continue it as a rental property or not. And so there is a chance that you would be evicted if that loan wasn't paid. Yeah. No, because you would sign terms initially. And that's why one of the things that you saw in there is to make sure you read all your contracts, right? Because as long as it's written in there, as long as you paid as agreed, blah, 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 we cannot do repossess any of your assets, then they have to follow that contract. And they have to actually go to court and start those proceedings to get a court order to repossess like a house. So, you know, they look at that contract and make sure that it's been followed to the letter.
Beautiful, thank you very much for that. Finally, on the 5 C's is conditions, anything happening that might affect your financial situation or ability to repay. Do you work in an economy that's having a massive layoff? Your investments in the things that are high risk, loss of the current market. Also not listed on there as well are medical conditions. So unforeseen medical conditions can be an amendment to the original agreement. So if you get really sick where you're hospitalized for an extended amount of time and you're not working, you're going to have a hard time making those payments, right? Certain amendments can be made for that stuff. So again, it's really important to be on time, but there are certain limitations to these types of things as well. And as far as credit history and credit scores, move on to that one, I guess. I think it's 2 up. So the other thing that we really need to focus on, folks, is that credit history and credit scores go hand in hand, okay? So whatever history you have, your credit score is reflective upon that, whether it's good or bad. So one of the other things, too, is that you might find a bank that'll lend you money even if you don't have a good credit score, but they're going to charge you a high interest rate. So if you have a good credit score, they're still going to lend you money, but it'll be at a significantly lower rate than they would have if you have bad credit. Does that make sense? So instead of 30%, you might get 3%. Sounds better, right? Cool.
And it goes back to when we were talking about Old Navy, right? If you don't pay Old Navy or your credit card debt goes belly up and they end up having to eat it, then the prices go up. Same thing with interest rates. If they think you're a good credit risk, then they'll offer you a lower interest rate because there's a much higher chance that you're going to pay it back.
So let's see, let's break down the slide. Lenders need to determine your credit history to see if you'll be a good risk. They turn to credit reporting agencies who give them all this information. So how much money do you currently owe? Monthly payments, credit limits, number of creditors you owe. It's all through your social. Whether you pay, I'm sorry.
You can have, in your packets, there is an example of a credit report. We'll be going over that in a minute. So if you want to get that out of the papers, that one you see. And that way, as James is talking about these things, you can see where it would appear on the credit report.
Absolutely. It's a great example. That resource is there on your chair, guys. Another factor about credit history and scores that determines it, whether or not you pay your bills on time. It's huge. Try not to be late on anything. Where you work, how long you've been there. Again, all reputation stuff. Other jobs you've had, how long you were on those jobs. Again, it's another reflection of how lendable you are, whether or not you're a risk. If you have had recent inquiries indicating that you may have taken on additional debt. So like you were discussing earlier about try not to go to a bunch of banks all at once and ask them for them to lend you money, because those are called inquiries and it reflects negatively on your credit score. And then the worst thing that can happen is not paying, like you were referencing earlier. And then what happens is that you no longer owe that money to that original bank you set it up with. Another company comes along, they're called collections. And they're not nice. They're a lot closer to what you guys were referencing earlier about breaking your knees and your arms and stuff like that. They're very aggressive. So that 3% loan has now become a 60% loan. And believe me, there's no negotiating with these guys. They will be at your front door. What's up, partner?
I was wondering, like the credit score,
Yep.
what's the difference?
Oh, we'll get to that in just a moment. We have a really neat pie graph. It's really neat. And we'll talk about the percentages that they weighed out. Matter of fact, let's just flip to the next screen. Here you are. You must have ESP or something you can see into the future. So these are the ways that things are broken down, okay? So 35%, so the majority of all the different factors there is the history of your payments. On time, how much did you pay? Did you pay the minimums? Did you pay over? The second biggest is 30%, and that's how much you owe all over town, okay? Bank of America, Chase, Wells Fargo, San Mateo Credit Union. How many places do you owe money? The other three factors only add up to 35%, so they're a little bit less impactful, okay? So the length of time you've had credit history is also important, but it's types of credit that you use. Credit cards, lines, loans, auto loans, mortgages, Susie needs new braces, and then of course the final one is how much new credit that you have, and that's a small amount. But let's go back up to the top, guys, and this is kind of more along the lines of what you're asking, partner. The numbers typically range on the credit score from 300, which is awful, very, very bad, no one's going to lend you any money, to 850, which is very rare. I had a guy the other day, he's 104 years old, he had an 842 credit score. The guy was bad, man. He had 15 accounts, he knew every single account number, start to finish. Over 100 years old, very cool guy. I went to his 100th birthday 4 years ago, so it's legit. Believe me, he doesn't move very fast. He's physically, mentally, he's as sharp as a tack, but. What's that? No, there's really no room for a retirement plan with this gentleman, you know, because every day is kind of a bonus for him. But as you look at the bottom, folks, again, I don't want to do overkill here on the slide, but you can see the ranks and how they go with the words next to them: poor, low, medium high, high, and very high. Again, as you get into the medium high, anything above 650 to 800 is like almost instantly lendable, okay? What's up, partner? No, that's the lowest you can go. But believe me, if you go below 600, you're in some pretty serious trouble. You're going to have people who will lend to you, but they'll be what we like to refer to in the banking industry as predatory lenders, which means they're really interested in giving you money because everyone else turned you down. But unfortunately, you're going to have to concede on the side of the interest rate, okay? So you're going to have to pay a much higher interest rate.
What's the average credit score?
It really varies, and it's based on all the factors that we've discussed previously. But I don't know, if you're a successful adult and you've been good and mindful about stuff, you should really be somewhere between 650 and 7. Anything above that is someone who has massive amounts of credit history and huge balances that they pay off every month. Cool? So the next slide, we'll go into credit score.
And I will also,
go ahead.
typically, the lower end will be people, for instance, that they have defaulted on their debt, and one of the things that happens, for instance, if you write a bunch of bad checks, the bank will start out nicely calling you and saying what's going on here, and then they'll decide it's not worth their time, so they'll sell that debt off to a collection agency, and then those people will start and hounding you really, really hard. So the people on the low end will start out with a whole bunch of collections like that, and then probably a bankruptcy will be in there as well. So a bankruptcy does make it so you don't have to pay back a bunch of that debt, but it will affect your ability to get any new credit for 10 years. Yeah.
So you know, are you possessing cars really, but how does you possess your house? Sheriff's coming. They put a lock on your front door. It's a big deal. It's a really big deal, and that's eviction from an apartment if you don't pay your rent on time too, you know. Of course, owning a mortgage like that, I mean, you have to understand, folks, we're talking about 10 plus years on your credit record here. So average age in this classroom, I think, is somewhere around 14 years old. So it wouldn't be till after you're done with college before you can even ask to rent an apartment or something. I mean, look at these 5 or 6 bullet points up here, guys. Is there anything on there that kind of surprises you? I mean, look at this. Your ability to rent an apartment is based on your credit score? That's probably a surprise, right? You just figure any Joe off the street can go and rent an apartment. Well, that's not the case. When you submit your application, you're going to put in your social security number, your vital info, so that way the renter can figure out whether or not you're going to burn the place down with a house party, right?
Or even if you want to rent a car, they'll check your credit.
What about a hotel room? Anyone ever gone on a trip and got in a hotel room? Everyone in the room's done it, okay? Guaranteed, 100%. Your folks have to put a credit card on that thing. Again, so you don't go all Bon Jovi. Wait, Bon Jovi wouldn't work. So you guys don't go all Justin Bieber on a hotel room, you know what I mean? Yeah, that's right. He's a rock star. Anyways, I know I'm joking, guys, but I'm trying to make it more relatable to you. My point is that it's all about reputation, and these little things, I mean, it's surprising. What about the insurance premiums for your car? So if you have a bad reputation and you're not lendable, someone's going to say that your premiums are going to be way up here while your buddy over here is paying, you know, a significant less amount, each month because he has good credit. So, yeah, rock and roll. Enjoy.
All right, so.
You want to go back?
I don't have that. Okay, I think it comes away. 1 second. Sorry, technical difficulties.
You want me to respond?
Yeah. Okay, so let's go back. This is one more. Okay, good ways, so here's some positive ways to manage your credit score. One good way is to keep your card balances less than 70% of your credit limit, because once you start going towards 70%, your credit card company starts getting nervous, and they will, it's just bad. If you get close to that number, then that's just bad for you, and you don't want to be there. Also, only apply for and open new credit accounts when you need them, because if you start applying for too many accounts, it makes the lenders nervous, because when you're taking on all this new debt and you're opening up all these new accounts with everybody, it makes people nervous that you're not going to be able to pay it off and you're going to be irresponsible and open up too much stuff. Always consistently pay your bills on time. This is a big chunk of your credit score. It's very important. If you don't do that, then it's bad for you. Just make it a habit. You know, just every time it comes in, just pay it off in full, and then you're good.
By the way, that also includes managing your checking account well. So don't bounce any checks, because that will also show up on your credit history.
Yeah. Also, make sure that you're only borrowing as much money as you're making. Well, not as much. You know what I mean. Don't borrow more money than you could afford to pay back, because that's obvious, right? If you make sure that when you're borrowing money, you take into account the other things that you need to do, like, oh, I forgot I need to eat, you know? So make sure that you include excess costs that are going to be in your budget. Also, have good credit history for a long period of time. This means constantly maintaining things that we've been talking about with this whole presentation. Just keeping them habit, you know, just practicing them over long periods of time. And if you keep doing that, then you should be good, and you won't have to worry about any of this stuff.
And I know we harp on this all the time, but you need to start early, right? Just like investing. Credit, you have to start early. James and I were talking last week about the fact that I also have been in lending for a long time. So we see it all the time where people that are like 25, 26 come into a bank for their very first loan. They have no credit whatsoever, and they can't understand why the bank won't make them a loan. So we have to start earlier, just building your character, your reputation.
Yeah, so this transitions into our next one, which is the negative ways that you could ruin your credit score. So having little credit history, like my mom said, if you don't start now, then you're not going to have any when you need it. Like when you're going into college and you need that credit card, your credit card company's not going to want to lend you because they don't know you, they don't know anything about you, they don't know how you spend. So that's why it's very important that you do things like that. Also, keeping your credit card near the maximum spending limit is always bad. Never do that, because that way the bank will get nervous, and your credit card companies and all the people that are lending you money, they'll see that. And they'll see that you're not being responsible and you're not keeping it, you don't know how to keep it underneath the red line.
Does anyone know which credit card has no spending limit? Got it. American Express. They're the only one that has no maximum limit. However, you know, you don't want to go crazy on that.
Obviously. Because you can't pay it back, then what's the point? You're going to have to pay it back anyway, and you're going to have to pay back more on it in addition. Yes?
Debit cards contributed to your history.
Debit cards? No, not at all.
The only way they do contribute is, that essentially is managing your checking account, correct? So if you use
yes, because if you open them only when you need them, then you won't have any credit.
But you said do it
No, but I meant like only open up new accounts I meant don't use it like I meant only use it when you need it, because otherwise if you're
Does anyone have a credit card here? Yeah, I know Ryan does.
Yeah.
Of course, we're a banking family, right? So I started him early, right? So you start with your checking account, then you get to the point where you get a secured credit card, and then you, of course, on these you would have your parents guarantee it, right? So it's stages. You start taking little baby steps, and then you work up to the bigger ones.
Is there a fee for just having it but not spending it, any of it?
Well, at Wells Fargo, they have some special accounts for students, so.
The biggest thing to do is you won't qualify for a credit card until you're 18, okay? So what you can do is you can start to build a positive relationship with us by having a checking account or something, right? You can get a little ATM card for it. We have special accounts just for teenagers, okay? So your parents will sign up as the adult. You'll have access to all the money and you'll be able to do all your deposits and everything like that. But the cool thing is that if you have a good reputation with us for the next 3.5, 4 years until you're 18, with no overdrafts, with always keeping your balances in good shape, with always making sure that you don't write bad checks, whatever that kind of stuff is, then by the time you turn 18, you pick out a college, you open up, instead of teen accounts, you open up a college checking account, okay? And then what we do is we have a special program for college students where we give them a college cashback card. Now it's only for $500, but during that time, what you do is you use that college card as a tool to build credit, so that in another 4 years when you're done with college, or nowadays 6 years, you get an MBA, then you can go out and you can do all the other stuff. You can have a bigger limit card. And again, this is all making sure that you follow the rules that we've been talking about and you build positive stuff. But the step is, who has checking accounts in here? Probably everyone, right? Your folks set you up? Okay, half and half. Go home tonight, have the conversation with your folks. Hey, I want to start building a good reputation. The reason why I come is because my business banker, Armando, is part of the board members, and we were associated with the grant. So we appreciate being able to come here and talk to you. But I'm not just saying Wells Fargo. Make your own decision. Wherever your folks bank is also a great idea too, so that you can be a part of it. But B of A, Chase, Wells Fargo. The reason why you want to be a part of those big banks is because they've been around for a long time. They're not going to close tomorrow, and all your money's going to disappear. Okay? That's why the reputations are what they are. Anyways, I'll hand out some cards later if anyone's interested. Talk to your folks about it. Hand them the card. Say, hey, no pressure, but I'm ready to grow up, and I think I'm responsible enough for it. Okay?
All right, so I think we're going to move a little quickly to this next section. So exceeding your credit card limit is also bad. Paying, even if you pay some bills late, that's also bad. Just don't pay your bills late. Don't pay them late, okay? Also, having a short time on the job or at a certain address shows instability, which is bad. So yeah. Too late.
There. It just said, it was talking about how even the bums on the street could get a credit card, but they needed a permanent address. That's what it was. Yeah.
Wait, what do you mean by living the wrong address or living the bad address?
Not bad address, moving around a lot.
Yeah.
Because it shows instability of character. And by the way, just to let you know, when you move into your first apartment, always when you move into your next apartment, that landlord's going to call the prior landlord. So you better make sure that you're paying your rent on time.
Absolutely.
Big extra tenant.
But what if you're let's say you have work that you travel a lot, and let's say half a year you live on the West Coast, and then the other half of the year you live on the East Coast.
That's fine.
Moving around.
There's going to be records that you live in both places, that you pay your rent on time. Again, guys, there's a federal regulation. It's called the Fair Lending Act. Okay, so judging on your zip code, your area code, your address, we can't judge on whether or not we're going to run your credit or what we're going to offer you. We base it purely off your credit history. So if you live in EPA and the windows have bars on them, that's not going to change our mind about stuff. It's what your reputation is when they do your credit score. So again, there's a lot of checks and balances with the federal government as far as lending is concerned that we have to adhere to. We have to tell you about everything. We have to disclose all the things you're signing up for.
And we're that in a minute with the activity, but when you make a loan, ask for a loan from a bank, you will have an interview. It's very similar to a job interview. That's your opportunity to sell yourself, just like you would in an interview. And you would bring up those things, like for instance, I travel a lot, etc. Now for you, a lot of it, maybe your parents are in the military, or there's another reason why you have moved around a lot. Or maybe it's because your parents travel a lot. But you have an opportunity to put a comment on your credit report if you're constantly asked those questions. So credit card companies could see, oh, that person called in and they said it's the reason why they're late is because they were in an accident and so they couldn't work for 6 months. So you can call in and put that on your credit report.
Okay, so here, we're gonna go over your complete credit report. So that's the piece of paper we were talking about earlier. So this complete version of your credit history is called a credit report. You can request, and others can request with your permission. You can give this permission when you fill out a credit application or rental application form. So also most employers are going to check your credit report to see if you're a reliable person, if you're responsible. And you're more likely to be responsible on the job if you have a higher, if you have a good credit report. So it's always a good idea to review your credit report at least once a year. That way you can review for errors and get them corrected by contacting the credit bureau and the reporting entity. The Fair Credit Reporting Act allows you to receive 1 free copy of your report a year, which is good.
And I'm going to stop here because this will always happen to every one of you. So you need to look at your credit report, you need to look at your charge cards and your bank accounts, because errors do happen. I mean, banks aren't infallible, and you need, or someone could steal your credit identity. That's happened to my husband twice, okay? One person broke into a car dealership and stole all of the files for all the cars. And then within a day, someone down in Texas was charging on his credit card. So you need to look, and if fraud happens, you need to report it timely. And also get those, say there was a charge on there from Old Navy again, and you didn't make it. So you need to both work with Old Navy on correcting that, and also the credit bureau on correcting it. Yeah.
Did you say like credit is stolen from great business?
Yes, your identity can be stolen.
Is that like an identity thief?
Yes. Yes. So you probably have heard we've had a rash of mailbox thefts recently. Have your parents talked to you about that at all? No. So someone has been going around, especially up in the hills, and stealing everyone's mail. So they get credit card statements and everything in there. Now the credit card companies have gotten sharper, and they don't put your whole number on there, right? But say someone taps into your email account and gets receipts and things that are in your email, they can pretty well get a lot of information about you. And so what they do is they take that information, sometimes they apply for new credit cards in your name, and then they have them mailed to a different address, or they can get the credit cards that you own and call up and 1-800-Flowers and order flowers, or you can have things delivered. They can have them delivered like to a PO box, and then the minute the police figure it out, then they move on to a different location. So that's why you have to look at all those things for errors and also for someone stealing your information.
All right, so everybody has the sheet in front of them. I'm going to go over a couple things. At the top, you have your personal info where employers will show dates of employment and etc. On the left, that shows your time at your address and your various addresses and your names. Then the public record information will...
the one on your chair, by the way, is different than this, so as Ryan's describing it, look at the screen.
Yeah.
The one on your chair is a little more detailed, but it wouldn't show up on the screen, so that's why we use this one.
Sometimes they will ask if you have circumstances to explain, like if an accident prevented you from working or divorce, so that's why there'll be something there. Also, The credit inquiries, sometimes they'll have more debt there. You also have outstanding debt. There's a difference between limit and balance, and it's important because they can run out and charge the max amount, which is important, I guess. I don't know how to explain that.
Yes, these two are tied together. So, credit inquiries, why is that important? Besides, Ryan mentioned earlier that it makes you seem desperate if you're going out and applying to a whole bunch of institutions. Why else is that important? Anyone have any idea? Because what happens if, after you, all these people make you loans, and I'm the new lender, and I don't know those loans are now outstanding, and I don't know what the credit limit is or anything. So you could be way overextended in credit now. Or you can apply for a $1,000 loan from me, and a $1,000 loan from the next bank, and a $1,000 loan from the next bank, and we all say okay at the same time, and then you charge up those debts right away. So that can really hurt your ability to repay if you go overboard. And also same thing with how much you owe on your credit cards versus the balance. You want to be below the 70% that Ryan talked about earlier. But you also as a lender, you have to think, oh, well, there's room for them to charge another $800 there. What if they do that? Are they going to be able to afford that? Yeah.
Real estate, get a loan from one bank, and then get a loan from another bank. Pay off both of those loans, get really good credit.
Yes, you could, but you have to remember too that having too many credit cards and too many loans on your credit history is also not considered good, right? So you have to do it in stages, be reasonable.
Right.
I really, really want to get to the activity if we can.
We kind of went over this stuff before, anyways, on the other slide.
Yeah, the weights.
Yeah, we went over this.
Schedule.
The number one thing is the payment history, as you said, as you know, and then the amount you owe. We'll skip over this because I think.
Yeah, we'll skip over that one. It's not very fun.
And then I think as another note, to what you just said, when you're learning how to walk, you have to do that first before you run, right? I mean, that's an old adage. My point is that you'll start out with one type of credit solution, then you'll graduate to the next levels as you show that your credit worthiness is growing as you get older. So you're not automatically going to be given a loan for $10,000 with no credit history. You have to start out, and that's why I said that activity with the college card is a great idea. Since you're a college student, you're less of a liability than someone who isn't. So anyways, that's a particular program that we offer.
Okay, good. So if you guys can get into groups of, say, 6 by 6, and you're going to be the loan committee at the bank. There's 4 people that are applying for loans here, and you're going to decide whether you're going to make them the loan. A question we just received is, what does outstanding debt amount mean? That is how much you owe other people. So those can be personal loans to family, it can be an auto loan, it can be credit cards, it can be any sort of debt like that. Yes?
If you put like something like, official, like, I owe my $75. Your score's good.
Well, you're supposed to be completely honest, but honestly, if there's something on there that can't be tracked, like you owe your friend, things probably stutter when I say this, don't put it down. Don't think about the things that would be tracked on a credit report, right? So if you have borrowed things from people that report. So can anyone talk about things that stand out on this credit application? Michael? Yeah, has a lot of debt, doesn't he? But he makes a decent amount of money. I mean, that's
This guy.
$2,000 a month. Yeah, 700 is a good credit score. One thing I wanted to mention on this want to find out, are they selling their old car? Because that'll lower their assets. And say they're borrowing, X dollars on this loan, it probably takes into account the amount they're going to sell their other car for, right? So as a loan officer, I would go, oh, I better find out if he's selling that car, because then, I can't count that in the assets. So, who might make this loan? Yep.
Who wants to loan to Michael Carver? Come on, the guy's dying over here. So we only got
All
one
right.
guy?
Let me just point out a couple things about Michael Carver. He does have a credit score, good credit score. He has a job. He has steady income from the job. He's been on the job for quite a while. And also, what's an important thing about this type of loan? Yes, it's a car loan, which means what? You can take collateral, right? So he's borrowing $5,000. What if the car is worth $20,000? Would that affect whether you would make this loan or not? And why is that? Right, because the chance of him not paying a $5,000 debt when he's already put down $15,000 is very slim.
And then you're hoping he doesn't pay it back.
Okay, so I know the parents are starting to come, so let me hurry. Jerome Charles, did anyone work on this one? Okay, what did you see on this one? He's not giving it to this guy, and why is that? Yeah? There's a lot of money.
He's self-employed, and jewelry, keychains. It's okay, but I
They make too much money.
yeah, it's for a laptop. Like, $50 for a laptop.
All right. So you'll see for this guy, he lives with his parents, so he hasn't really established a lot of good credit on his own, and yet he has a fairly lower credit score because he already has a late payment on there. Exactly. Being able to verify where you work is really important. So I know a lot of you do babysitting and errands and dog walking. That will not show up on your credit history. So you're going to need a job eventually that shows up on your credit history for that to affect your credit rating. Okay. So Victoria Magia. What are some important points about this person? Yeah. And why would Texas matter?
I don't know, because around Texas, they're getting a toolkit, and there's a big industry of, like, people who make toolkits there. And
Okay.
so it's part of their investment.
So that was a very good point he made. The reason for the loan is critical. Okay, this person is borrowing money to improve themselves or buying a professional toolkit. They also make a lot of money. Yes? Yes?
Well, it says that they owe money as well.
Yes. They do have some debt, but compared to his income, that amount of debt outstanding isn't that much. That could easily be just one credit card even. And he does have some assets. And so he has savings and a car. He wouldn't be selling the car to get the toolkit, right? So because he's buying a professional toolkit, it's possible his income could even go up from that. Okay. All right. But there is one other credit inquiry, so you want to make sure they're not getting that one too. Okay, Carmen Vasquez. Vasquez, depending on how you
What's Carmen's credit score? No credit listed on credit report.
Is there a reason for that? She's young.
Just like you.
She's young. She lives with her parents. So why else is there no credit history? She dated babysits, right? She doesn't have a job that gets a check every month. Now, you can bring in references from your babysitters, especially if you babysit for them on a regular basis. Exactly. So this would be a kind of risky loan. Now, if one bank doesn't get you a denial, maybe another one that will charge 21% interest rate would give you a loan. But then your payment will be higher, right? Okay, great. So hopefully that'll give you a lot of, hopefully that made you think a little bit about building good credit. And I want to mention again, James is available to answer your questions about starting your credit. He gets business cards with him today. There are a lot of other institutions that also offer that. You should never be afraid to go into a bank and ask about it. Okay? So if you want a business card,